theme. Chris Roberts as well adds to their exposure in the Indian market. So all around the sentiment has improved for India. Chris, hi, morning. You know, we've been through a bit of a rough patch if you look at the last fortnight or the last 1 month. Do you think that this sell-off in the bull market is now over for India, or do you see some more in terms of a downside?
I think there's a reasonable chance it's over. We had a problem around 9,000, which we were anticipating. There were lots of natural resistance levels at 9 to 9.2, which we were talking about before the market got there, which could hold up the market. And I think two things happened. As well as running into that resistance, suddenly we had a massive China fest in March, April, and every other market in the region got neglected. Everything was focused on China. And to give you some idea, from March to April, the MSCI India lost 28% against the MSCI China. I think China's move took people by surprise, and there was a rush to get exposure to the biggest market in the region, essentially.
But will you see more of that, you think, Chris?
Well, I think now probably having seen such a strong move in China, I think people will wait for some consolidation to add exposure. That would be my view as well. And I think that what we're looking now is what's been neglected. And India's come back, I think, around about 10%, something like that. And it's come back to a level where we think there should be very good support. Around the early 8,000s, that should be a good level for the market. And I think the most encouraging thing is if you look at the stocks which are in uptrends, I can't find a single one that's broken important support. So for me, I find that very encouraging, and we've recently been adding exposure to India and recommending a few more names.
Okay. Well, actually, then why don't you get to those micros? Where are the charts indicating that the upside is better than others?
Okay, so a few things we've been adding recently. ICICI Bank. Dr. Reddy's we like, and also things like HCL, Z Entertainment, Bajaj Auto. Those are a few names we've added to in the last, say, 3 weeks or so.
Okay, that's an interesting list of stocks. So you have private sector banks and pharma, along with IT. No PSU banks at all? No public sector banks added to your list?
No, our whole idea was which stocks are declining close to important levels where people should move in, so the risk reward is attractive. A lot of our customers are hedge fund based, and so we're quite keen to find risk reward ideas where we think they're attractive. Classic one of that would be Bajaj Auto, which probably looked terrible to most technicians, but actually to us at one stage, as it came down towards 1950-ish, was looking like it was a very attractive level.
Okay. Well, the other one that's obviously been negative for us, fundamentally speaking, has been crude. How would you draw the crude chart, Chris? Is 68 on the Brent or whatever, 55 on the NYMEX a kind of top? Or are these charts looking like climbing higher?
That's a good point to bring up, because last December we reached a level on crude oil which was a 26-year extreme. And so our bet was that there should be some reversion to the mean. Now we've done the easy yards, we've reached the hard levels. I think basis spot Brent 70 to 73, I think is going to be quite a difficult level for the market to get through. And when you look at the history of V-shaped reversals, they very rarely result in persistent advances. So what typically happens is after you've fallen too far, you get a very strong rally as we've had, and then you form some sort of ranging move as people reassess what's going on. And so I think we're getting quite close to moving from a decent rebound into more of a ranging market, and then we'll have to see how the trend develops from there. But I think that the easy rebound and the strong part of the recovery, as far as I can see, is probably behind us. So I'd be a bit more, I think, a bit more challenged by what's going to happen on oil in the coming weeks.
You did mention that the risk reward has improved for names like Bajaj Auto. What about other auto stocks like Hero MotoCorp that have, lost 25% since the start of the year? Would you add exposure there as well? And what do you do with some of the best performers in that space like Maruti?
Maruti we haven't really got involved in, which was probably our fault, wasn't on our radar for a little while. Tata we're still long and we still like. We added to Tata in January, and we still think that's looking good. But I think Hero is one of the few stocks which has broken important support, so we're not interested in that anymore. we'd much rather see the stock stabilize and start to try and form a new trend before we get involved again, because it looks like there's been a few problems there. Remember, we are purely based on data here, so when I see something like that, I'm not that interested. So we would be avoiding that stock.
You know, a big fat stock like Reliance can break or make markets. It's been kind of neglected in the past 3-4 years, both in the upturns and downturns. Any views at all?
Yeah, I think it deserves to be neglected. Really, it's just I think that we've sort of I can't see a trend on that stock, and from time to time we've recommended selling stuff like Reliance Communication, etc. But I don't think we've had a buy on any of those for a long time. And I think really what's made the Indian market, it seems, are the very strong growth stocks, and those are the ones we've tried to focus on, trying to keep it simple and staying with stocks which have very little resistance to the upside. I mean, if you look at a Reliance chart, how many people are losing money on their positions?
All right. So the scintillating rallies of 2013 were the IT stocks, TCS and Infosys, and the big rallies of 2014 were the two pharma stocks, Lupin and Sun. Where are they on your radar now?
We are out of Lupin. We were very lucky. We got into I think August 12. We recommended buying Lupin. We finally sold about 3 weeks ago the last part of the position we had in Lupin, which is now for us broken down a little bit too much. So if you notice what happened about 2-3 months ago, some of the less performing drug stocks such as Dr. Reddy's and Ranbaxy came back into style a bit and broke out. They looked more interesting to us. So Lupin for us now is, I wouldn't say I'm negative on it, but we've removed it from our long list. We've taken our profit. We're happy to be elsewhere. Hence the more recent recommendation on Dr. Reddy.
Okay, so let's talk about that elsewhere then. In your note, I see that you're overweight on the telecom space as well. Bharti Airtel has, given a decent performance this year. It's up almost about 14% already. Have you increased your allocation there?
Well, this is a regional call, and actually what the telecoms which have been quite strong have been some of the Chinese names. Everything in China has been strong over the last couple of months, I guess. But in India, we have looked at Idea Cellular, but have not really got excited by it yet. So most of, again, we're more regional than Indian focus. So most of the stocks I've described to you, we have long-term positions in things like Hindustan Unilever, but they are from such a low level that I don't think I'd be recommending it again here. Not that the stock's underperforming, but simply the risk-reward isn't there at the moment.
All right. I just had one follow-up question to the point you made earlier about the support on the Nifty at 8,000. What about the upside for this market? I mean, in case we do resume our bull trend, how much could the market give us in terms of returns by the end of this year?
Okay, I won't talk in terms of months, because I think in technical analysis the hardest thing is time, but a couple of things. First of all, we don't want to see a daily close below 79.61. A daily close below 79.61 would worry us, and we would turn neutral on the market as a whole and look at all the stocks we recommended to make sure they're still intact. So that's the first thing. On the upside, I think we can see some ranging here. A daily close above 85.05 would suggest that the correction is over, the ranging's over, and we're going to challenge the high. The high is 91.19. And India has a very strange fascination with round numbers. So the minute we get above 91.19, my view will be we'll look for 10,000. That's quite a big round number and maybe a bit worrisome to some people. And the next significant cyclical decline in India should begin from our work either later this year or sometime next year. So maybe that would start from around 10,000 or just above 10,000. But I think we've been very fortunate so far in this bull market where we have not seen a prolonged, difficult decline. And I would not include the one we've seen recently as prolonged or difficult. It's just a normal corrective pause in the marketplace.
Well, that answer is a positive and a negative for investors, Chris. Finally, let me get one more micro question in. We spoke about practically every Nifty stock. Outside the Nifty, do you track any? Are there any leading lights?
We mainly focus on things like I think I may have mentioned this to you before, one of our recommendations for this year is to be long Indian small caps, and we really don't delve too far into those names. We don't, most of our clients are regional or international global guys, so we typically don't look at too many of those names. But I I would say that looking at our work, we think that the small cap space is a good place to be in.
Okay. Well, if we have a half a minute more, then what's the view on the rupee and separately on the dollar, not vis-a-vis the rupee, but dollar index, say?
Okay, the dollar as a whole, again, it was like the oil market. The dollar became incredibly popular and overbought. Lots of forecasts of euro going to 85, 86. We have moved out of the dollar, and we now have a long position on the euro, which we put on a little while ago, and we're expecting to see further dollar corrections. Had a fantastic move in 14 and 15, big move, and we're expecting to see some more consolidation. But a bit like the oil market, V-shaped corrections don't persist. So we're expecting at some stage that the euro will start to range again, but I feel for now that there's more upside on the euro, possibly 114, 115, maybe even as high as 120. But on terms of the rupee, I still have the same view I've had for a long time. It seems to be in a gentle depreciation, but not enough to harm equity investors. It's still not going to take enough off their plate in terms of the net returns to worry them. But I really feel that it goes through periods of weakness and sometimes sideways movements. It's going for a sideways movement now with maybe slight weakening tendencies, but it's not enough to worry people. It's not accelerating down like some of the other currencies we've seen around the world. So I feel that's a positive, but expecting the rupee to be strong is something that really hasn't occurred on a persistent basis for a long time.
Chris Roberts, unfortunately out of time. Thank you very much for joining us.